Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on ospreystrategic.org as well as stockcharts.com. So today I want to cover off crypto, and why today and why I normally don't talk about crypto is it's been in a downtrend for a while, and that looks like it's changing. And so I wanted to show you what I would look at to see that change take place. And then the second part of the reason to think about crypto again is as we move through I'll call it the crypto development or the development of blockchain, we might find that the top performing crypto is no longer Bitcoin or is no longer Ethereum or is no longer, any one of the other ones, Luna or some of those. So the bigger issue is how do we keep track of that, and how can we set ourselves up for success to make sure that if we wanted to trade these things, we'd have a way of looking at them. So I want to cover that off. And lately we've had the risk on gathering momentum, which is, when I say that means that we're starting to put money back into the stock market, into things that have been selling off. I want to specifically look at the indexes and show you some of the changes I'm starting to see. And then railways, there are only a few to look at, but they're doing something interesting that's right here with the stock market, roughly down 10% from the highs, and yet these charts are different. And then again, as I mentioned at the beginning, we're going to go through crypto setups. So if you're interested in the type of work we do, I would encourage you to head over to the Osprey Strategic website. Again, it's ospreystrategic.org. And if you go there, you'll find you can get an annual pass for $860, and what that does is that allows you to just kind of see the rhythm of the market over the year, and I think you'll find some pretty good help with entries and exits, which has been very successful for a lot of people trying to, I'll call it, invest high net worth and yet protect their capital. Or you can just go in and glance around for 1 month at just $7, and then it converts to a regular monthly membership. So what do we offer over there? Well, we've got award-winning technical analysis. There's two CMTs working on the program. One of them, Dwight, he posts a lot of stuff on the actual chart setups on a regular basis, and I do more on the macro events and try to look across 4 different asset classes: the commodities, currencies, stocks, and bonds. And so when you look at the newsletter, the idea is that after reading that for kind of 10 or 15 minutes each week, you're going to get a feel for how the market is changing. And the weekly video goes into more detail. It's roughly an hour each week. We also do a monthly conference call. And again, as I mentioned, Dwight does 5 trade setups, and he posted one the other day and I jumped on it, and I think it's up 12% or something already. He posted some other crypto related ones the other day, and I jumped on that, and I happened to get the big winner today. But it's just I think it's important to have somebody helping you organize the market, and if that would help you, feel free to check out the website. And as always, thank you for watching Market Buzz. We appreciate that. So let me head over and get going on what I wanted to cover off today. So again, let's start with the market overview. And the easiest way I find to do that is to just kind of look at the page here. So the Nasdaq is back to outperforming. So it's up 1.94%. The S&P is up 1.1%. And the Dow is up 0.74%. All of those are pretty important little triggers to give us some clues of what's going on. And essentially what we're seeing is risk on, right? The Nasdaq is finally starting to lead, and we haven't seen that for a while. So we can click on this, and that'll change this chart over here. Now we're going to click on this chart over here and just see what's going on. So it's been pretty much a river higher since the Monday close of last week, and then we ran up into the Fed meeting, and then ran up into options expiration, and we're coming out of that really well. And I think the big catalyst that we're heading into here is the earnings period for April. And then once we get through the earnings period, I think the stock market will start to go back and worry about all of the issues around interest rates and inflation and that type of thing. But for now, I think they want to target, I'm expecting it to target the overall picture for earnings, which is still good for the first quarter. Okay, so we're back above the 50-day moving average on the Nasdaq, not quite above the 200-day yet. When we look at the S&P 500, that is. But notice this trend here. So this has been a downtrend. The Nasdaq has been underperforming the S&P 500 for 4 months or so, and really since the Nasdaq topped out. You can see this was down as well, but we can go all the way down here. And now we're starting to break that downtrend in outperformance. And I think that's a pretty big deal. You can see over here when the NASDAQ was rocking, we were in a nice uptrend and that was working better. And then we ended up just literally, I'll call it going flat, where we're starting to underperform. And then as we really start to make new 3-month lows in underperformance, that's when the NASDAQ really started to fall away. So all of those things are good clues for us that the temperature might be changing. And again, as you're trying to get back into the market, this is just one clue that we have. Now, I'm not going to save these few sketchy annotations. But the main point that I want to point out is we are trying to rally here. And I do think there's lots of fuel for us to do that. If the October low was our resistance line, we're breaking through that as we speak. So that would come in at the 14.5 level and we broke through that. I think that's an important component, that we are breaking higher. We've now made a higher high here, so this looks really solid. I might as well do the S&P 500 here while we're here. The big thing for the S&P 500 is we're back above both moving averages now, and this looks pretty good. And we can see that there's a line here, call it 4,500, which was the early December lows. And what we want to see is that we can, that line doesn't become a problem, because that was also the September highs. So if we just go down here, and you can always use the annotation tool to draw a line, or you can just use this tool here where you just add an actual line on the chart. And you can see September high, December low, and kind of the area that we struggled around in February before we actually started to break lower. And now we're right back to that level. So the question is, do we have enough horsepower to go higher? And I'm going to show you some of the other charts that I think suggest, yes, we are going higher. And then you're welcome to decide for yourself. But from my perspective, I always want to be optimistic that the market is going to rally. Even bear market rallies are very big. They're big swings, quick, and then when they roll back over, you just step aside again. But you got to make money while the sun shines, and we don't know if this goes on to new highs or if this stalls out in the next week. We just don't know. But what we do know is we've got the data behind us, and we can kind of use that to help keep us with our foot on the gas or on the brake. Okay, so here's the NASDAQ advanced decline line, and this thing has been deteriorating since June. It's been struggling to go anywhere. Meanwhile, the market was going up. Well, then we saw this start to decline. We saw the underperformance compared to the S&P 500. And when we started to see that, that created pressure. Well, look at that period. Basically, we saw very few stocks advancing compared to declining, and we've really been selling off through this whole period of November and not really doing much since July. So if we took the July high, we were at around 14.5 and we made it all the way up to 16,000 with a brief run up here just in October, and then that signal rolled down. But I think the more important thing is this is a 2-week moving average of the NASDAQ advanced decline. And what do you see here? I see it being pretty weak. But what did happen was, well, the stock market was making lower lows. We were getting less stocks making new lows. So the advanced, or making new, a lot more stocks making lower lows, I think is the important thing to say. So the advanced decline line was starting to improve, whereas the ratio of advancers to decliner wasn't as sad as it was back in the early part of January. Anyway, we've broken out of that downtrend, and I think that's good. I have one other chart I like for the NASDAQ, and what you see here is this is the number of stocks making new highs compared to new lows, and we've been stuck under this zero level for quite a while, basically since November, and I put this note on here So it's been flagging this since November for my clients. And what you can tell is that look at this 2-week moving average of the high-low data. That was pretty clear that we were changing a lot. And so now we've had this big pullback. We aren't pulling down as hard now. We're breaking the downtrend line. And if we can get back into positive territory, this would be good. But also notice this ratio was improving. The number of highs to number of lows got really depressed, and now it was improving and improving on each one of these stock market lows. So it also gives us a clue that things are starting to improve. That was for the Nasdaq, and then when we do the same for the New York stock market, we saw similar sorts of actions, but these downtrends are breaking, and typically those are a nice place to get on board. So I know that there's a war going on, and I know that there's a whole bunch of other things, inflation and the Fed and consumer confidence and all that kind of stuff. I'm aware. The bigger issue that we want to follow is what is the price action? Are investors pushing in or pulling out? And what I see here is the investors are pushing money in. And so when that happens, that typically forces stocks higher. When we go to the New York high-low data, we have the same problem where we're struggling down here below this. In the case of the New York market, it's actually a higher line than zero. But the same sort of problem exists. And what we want to see is that this starts to get back up into a higher level. And when we're in that higher level, typically we're advancing in stock. So that's just kind of a quick clue. By zooming out here, we can also see that we're in these big downdrafts. This is what makes the market hard. We want to go positive here, and that makes for a pretty good clue that we're coming off the lows. If we look back at the COVID lows, that took a while, right? Because the number of stocks making highs were a long way from the previous highs, down 35%. So it took a while for this index to start to turn around. In this case, we're about 10% off the highs. So we can still move back up before this indicator starts to fire off any real buy signals. But for me, a lot of the data is starting to tell that. And then when we get into the McClellan oscillators, those have also been helpful. And what they show us here is that this is the daily reading for the McClellan oscillator called the NYMO. And when you look, this is the highest reading we've had in a year. When we go back, this is the kind of reading we started to get in November when we had the COVID vaccines come out, and all of a sudden the stock market went on a big rally, right? That's this rally in here. So we're getting a nice high level here, and coming off the 2020 floor, we had a soaring level. That our first clue that this was pretty good got us up into this range still in March, and then pulled back down and went on to tell us, yeah, we're in a big rally and get on board. So we want to use these clues to try and help us. I would suggest that this McClellan oscillator is giving us a pretty strong clue. When we go to the same thing for the Nasdaq, this has been declining since the 2020 breakout. The one in November was pretty big, but we're actually above that level now. So we're getting a big, wide breadth push, and I want to make sure that I'm trying to ride the market up during that event. Okay, so I think that's important, just perspective on what makes me bullish here. It could all unwind, but at some point we have to take some clues, and these are the clues that I'm seeing that suggest I want to get long. I want to cover off the railways, and there's a reason I want to cover them off. So while the stock market dropped meaningfully, down 22% or 23% on the Nasdaq, what we're seeing for the railroads is they're pinned up near their highs, and I wanted to point that out. There's only 5, so we can take the time to go through a few individual charts. But the main point that I want to show here is on this CSX rails, and I'm trying to figure out why this chart isn't updated. Let me go back. Something wrong. Anyway, I thought I annotated this chart out nicely, but you can see here 37.90, and it hasn't quite broken through yet this week, but it's very close. We're sitting at 36.78. It wouldn't take more than $1 to break through this, and we've had a really nice smooth uptrend. But what I like is these charts have been making higher lows for 5 or 6 weeks already, The PPO is now trying to turn up on this one above zero, which is usually a nice place to get on board by my work. And then the second thing is, look at our scooter ranking. This is the highest it's been in 3 years. That jump up to the top there was pretty confirming that this is starting to be a bigger picture move. So I like that change in behavior where it's actually outperforming any of the period prior. When we look at Norfolk Southern, it isn't quite as rosy on the SCTR ranking. It's improving, but it's not quite as good as I would like. The relative strength is making new 6 or 8 month highs here, so that was pretty bullish. It's pulled back a little bit, but you can see the chart here is right at resistance. Any sort of break above that would be pretty comforting. And we're seeing the PPO momentum indicator trying to turn up near zero. So from my perspective, that's really helpful. I noticed on Twitter today, Helen Meisner, who does a lot of charting, and she does charting by hand still just to kind of keep the rhythm of the markets. I think that's a pretty impressive venture with all of the opportunity to just use computers. But she still writes out a bar chart with the high and low and adds pieces of paper as it moves. And quite an interesting follow on Twitter. But I will say, one of the things she pointed out was today, and I use it all the time, but I wanted to make sure people are aware of it. If you don't like it when the chart is right up against the edge, so if I just get rid of this, what you'll see here is, see how the stock price is tight to the edge of the chart? Well, by adding these extra bars, this is a little trade tip for the day. By adding these bars, what you can see is that this is a nice blank space and just allows you to see the end of the price action clearly. And then the zoom panel is this, and by doing that you get this little extra box on the side that condenses the last 18 periods. So if you're on a daily chart, 18 days, a weekly, 18 weeks, and just gives you a close-up view of what's going on down in the bottom corner. So I particularly like to use that. It helps me a lot. But hopefully if you haven't figured out how to turn on those two features, you'll find that makes your charting a little smoother and a little easier to see. So here's the Canadian Pacific Railway, and what do you see on this chart? This one is trying to pop out to new all-time highs. It did a 5-for-1 split last May, and then the stock basically consolidated for the year. So here we sit kind of in the following spring, but to me it looks like this chart is ready to break out. And it was up, it's up, call it $2 in 2 days from around $80. But the bigger thing that I think is important is they've done a big merger, or trying to complete a merger with Kansas City Southern. And what's happening here is the PPO momentum indicator was just grinding along zero, and now all of a sudden it's really starting to surge. It's that surge that I like, showing me that the stock actually wants to run. And as it does this, look at the relative strength starting to break out. Look at the scooter ranking starting to improve, and it's up at a higher level than it's been at 3 years. So that's two railways with this scooter ranking really starting to ramp up. And then when we get into Union Pacific, this one's also got the scooter ranking up at a very high level that it hasn't been at for multiple years. So all of these railroads are really starting to outperform. Their stocks are some of the best stocks in the market. I like the uptrend in relative strength here. This one recently broke out to new 3-year high, so this one looks really strong, Union Pacific. And you can see the PPO turned up well above zero at a very high level. That's pretty bullish. We've got an uptrend here from last September, grinding sideways for 3 or 4 months. But while the market was correcting, these stocks were all starting to break out to the upside. To me, that's a very bullish thing to look for. Anyway, so the fact that there's only 5 of the railroads, there were 6, now there's 5 publicly traded, but that tightening up gives us more clues of what's going on. And again, Berkshire Hathaway owns Burlington Northern, and with that, the Berkshire Hathaway chart is breaking out to the upside big time. So if you're interested, I think there's a play here on these, and it's a nice slow steady grind. They don't pay huge dividends, but nothing wrong with a couple of % in the account. Okay, the third thing that I wanted to talk about was the crypto world. And for those who know me, I'm not a big crypto trader. I'm not a believer in the US dollar disappearing anytime soon. I don't have any of that background. I'm talking price action only. And whether you're a crypto coin lover or not, this has nothing to do with the crypto coins. This is price action on these, on the cryptocurrencies, and what I'm liking what I'm seeing. So here we are at the 1 month. And if you look down this list, so I've sorted it based on the closing price. And then here's the relative change over 1 month. And the green bar obviously makes it easy to kind of look. But what we're looking for is, how are they doing? Well, these things are up 20% in a month. That's not bad. There's some pretty nice trades in here. And when we start to look at the charts, just by hovering over them on the left, it pulls them up here if you just hover. And so this Bitcoin chart to me looks like it's ready to break to the upside. If I go to Yearn Finance, this one looks broken to me, but I was sorting it based on price. So we'll just look down through some of these. When you get into some of the big breakouts, like as an example, this chart went from 150 to 200 in the last month. That doesn't look like much, but it's 30%. Obviously, if it started to take off on a rocket ship like it was on before, it could move quite a bit more. And then this EGLD has really started to turn up 22%. This next one, Zcash Zcash is up 71%. Looking down here, here's Luna, and this one's been great. It's up near its all-time highs and looks like it wants to rocket out of the park. When we go to Solana, this one was popular for a while there, August to November, it ran up. And it's been declining ever since. But if we're going to a risk-on market and we're starting to see some of these charts turn up, I think this might be one area of the market that we could go look at. So here's one called Waves, and look at that move from the end of February. It's basically $10 to $30, huge surge. And if you're looking for things that are jumping, you can use a rate of change. So we could just set this for 1 week and just say, what has really started to move. We could sort based on that. But you get a lot of the penny stocks at the bottom, so that's one of the reasons that I don't really like doing that, because here we are, a 60-cent stock, and it's up 35%, or a 60-cent ticker. Anyway, my big point was try and go in here and look to start to see what's happening on some of these charts, and I'll show you the reason that I'm starting to like them. Here's Bitcoin, and we're starting to get the PPO momentum indicator turning back up. Again, weekly charts here, not trying to get down to the daily minutia. I want to catch the big rides that last 6 months, a year. I'm not really focused on a couple of weeks at a time. So one of the things, if we start drawing some trend lines on these charts, when you get a 4-month pullback in here or out here, this is a nice way for you to just gather the fact that the momentum is changing. And that was a pretty nice entry point. Here's one in here, and then also one here. And I usually like this second wave better. So here we have one down here. We're just starting to turn up, and I wouldn't mind seeing that breakout to the upside. If you get that big move, again, we're trading whatever up here at 45,000. You can see this chart's kind of compressed. If I shorten the chart, it would suggest that we're going to move meaningfully higher. The prior high is 69,000. We're at 42, roughly 27,000 to get to the prior high. That's about 50%. So we've got a 50% move just to get back to the prior high. But these charts actually made higher lows over the last 18 weeks, while the stock or 13 weeks, while the stock market's been correcting since the beginning of the year. All of that lines up to me to just say, maybe you're not a big crypto trader. Maybe you want to be a crypto trader. I think now is an interesting time to go look. Again, these things made higher lows here from January, February, and March, whereas the Nasdaq was making lower lows. So I like that change in behavior where, from a risk-on perspective, it didn't continue to drop. So that's one of the things that I really like about that. And we could go do this on another chart, but I think Bitcoin gives you a good enough example. And I have I have multiple different views of Bitcoin. And the point I would just like to make here, it doesn't matter whether you're looking daily or whatever, but this is just over the last couple of weeks. It's just been grinding higher, and now all of a sudden we're starting to make new 1 month highs in March here. All of these are looking pretty good. So anyway, give it a chance if you're interested. Now looks like an important time to think about it. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern Time. You can also see the recording on the StockCharts TV YouTube page. And thank you for taking the time. Head over to ospreystrategic.org if you'd like more information on what we do. Thanks, everybody. Bye-bye.